Here's our next transaction. February 13th, received $600 from Beverly Jones for invoice number 1001, her check number 6544. Now notice it says that Beverly Jones is paying an invoice, number 1001, and she's giving us a check, which is check number 6544. Recall that back on February 1st, she purchased 12 hours of decorating services on account from us. If we wanted to, we can verify this by looking at her transaction in the Customer Center. So let's do that. So I'm opening up the Customer Center, and then I'm going to single click on Beverly Jones, and her transactions should show up here. Now you might be saying, well, apparently she has no transactions, but remember, to see all the transactions, this has to be set to all, this has to be set to all, and this needs to be set to all. So I'm going to scroll up to the top and choose all. And there we go. Here's a transaction we did on February 1st. It's in the type column says invoice, so that means it was entered in the Create Invoices window. The invoice number is 1001 and it's for $600. If we wanted to, we could double click on this to open up the transaction, but we don't need to now. So now for learning purposes, what I want to do is open up a journal report for just this date, just to see what's going on behind the scenes. So I'm going to open up a report, go to Accountants and Taxes, choose Journal. Now notice the date was February 1st, so I'm going to choose 02/01/19, 02/01/19. I'm choosing the same date for the from date and the to date just to filter out all the other transactions. And there we go. So I'm going to widen the account column so you can see what's going on. Now notice over here it says type. Remember, the type column tells us what type of window this transaction was entered into, and this transaction was entered into the Create Invoices window. That's why it says invoice here. Happened on February 1st, invoice 1001. So now here's the key components. AR is being debited, which means AR was increased on February 1st because at that point Beverly Jones suddenly owed us $600, and it increased the revenue account decorating services. So when Beverly pays us, we need to make sure we're using a window that will lower Beverly's accounts receivable account so that our records show that she no longer owes us the $600. So what window do we use? Well, let's go back to the document called Selling Services or Products, Processing Steps. This is a Word document that you can look at on Canvas. So looking back at the original transaction on February 1st, we provided 12 hours of decorating services on account. Because we provided it on account, that means she did not pay us immediately. So we use the Create Invoices window, which correctly increased accounts receivable. So now we need to use a window that will decrease accounts receivable. So we follow the arrow down, and it says we must use the window called Receive Payments. We will use that window to process the check that Beverly just gave us. Notice accounts receivable will go down, which is exactly what we want to happen. The account that will increase with a debit will either be the cash account or the undeposited funds account. So what is the undeposited funds account, and how is it different from the cash account? Well, the cash account is the company's cash that has been deposited in the company's checking account. In other words, it's the company's cash in the bank. The key words are in the bank. The undeposited funds account, however, is cash in the cash register or inside a locked box in the company's office. In other words, it's not deposited, which is why they call it undeposited funds. Since this check is not going to be deposited in the bank right away, QuickBooks will increase the undeposited funds account for us, and then later at the end of the month, we will process a transaction, which is the bank deposit, which will move the check from our undeposited funds account to our bank account, which is called the cash account in QuickBooks. So now this makes sense. If someone gives us a check, we're going to put it in the undeposited funds account because we're not going to close up the shop when someone gives us a check and run to the bank right away. So now we know to use the receive payments window. Let's do the transaction in QuickBooks. So I'm going to switch back to QuickBooks. I'm going to go to my home page. Now notice this is the customer section. And also another way you know to use the receive payments window is let's point to it and see what the tooltip says. It says record a payment that you have received from a customer against an invoice which came from over here. So notice the arrow goes from create invoices to receive payments. So if you enter something in an invoice, the way you receive the payment is you follow the arrow and then you use receive payments. So I'm going to click on receive payments, and the field that's highlighted is received from. So I'm going to type Beverly Jones. I'm going to type her last name, Jones. So I'm going to tab. How much did we receive? 600. Tab to the date 02/13/19. So February 13th. I'm going to now over here we have to select, is she paying us a cash? Is she paying us a check? Is she using a credit or debit card, etc., or an e-check? And then more. Well, what did she give us? She gave us a check. Now notice when I'm going to click on the cash. If the cash button is selected, this says reference. But if I click on check, it changes this field to check number. So then I click here in the check number field, and the check that she gave us was 6544. Now when you use this window, if she had multiple invoices that were unpaid, they would all appear here. Then we would use this checkbox column to select whichever invoices she is paying. Now if she was doing a partial payment, we could change this to a different number. So if this was unchecked, so notice I unchecked this box, this payment has defaulted or was changed to 0. But if I check this box, which means that she is paying this invoice, it will pre-fill the payment. So basically you just check the box of the invoice that she's going to pay in full, and if she's not paying in full, you change the amount here. Now it's critical that this payment amount field is equal to the payment field. And let me double check everything. Looks good. And then I'm going to save and close. And then for learning purposes again, I'm going to go back to the journal and check out what happened on February 13th to see what happened. Now remember, this is the journal I had open, which was February 1st, so I'm going to change the dates. 02/13/19 for February 13th, 02/13/19, and we've got several other transactions, 3 that happened on that date, but the one we want to look at is this payment transaction. So notice it did the most important thing, which was lower accounts receivable. So on our records, it will show that Beverly Jones no longer owes us that $600, and it increased our undeposited funds account by $600. So later, we will need to go to the bank to deposit this, but that's a different transaction. So obviously, you don't need to open up the journal reports. This is just a learning process, but since we're talking about the learning process, let's go back to Beverly Jones part of the customer center and see what it's saying. Notice over here it says she no longer owes us $600, and over here are those 2 transactions. Here was the original invoice, and here was the payment on February 13th. And that's it.